Today, I invite you to join me on a thrilling journey into the wild world of cryptocurrency. It's a place where technological advancements meet high-stakes finance and where fortunes can be made or lost in the blink of an eye. In this massive battle for crypto supremacy, we have big players, emerging challengers, regulatory crackdowns, and shifting global attitudes. Each day, new headlines promise game-changing developments. It's an environment buzzing with excitement, where the only certainty is that nothing stays the same for long. Right now, the crypto market is more alive than ever before, and people are lining up to see which coin will ultimately claim the top spot. Bitcoin, long considered the leading powerhouse, faces competition from countless challengers, including Ethereum, Solana, Polkadot, Cardano, and many more. With so many contenders in the ring, it's anyone's guess who will come out on top. But today, we're going to dive in headfirst and examine why this fight for supremacy is happening, what might tilt the scales, and how it could all shape the future of finance. To understand how we got here, let's take a quick look back. The story of modern cryptocurrency starts with Bitcoin. Introduced in a 2008 white paper by the mysterious Satoshi Nakamoto, Bitcoin was originally designed as a digital peer-to-peer cash system. Its main innovation was blockchain technology, a decentralized ledger that could record transactions on a global network of computers. This system eliminated the need for traditional middlemen, such as banks, to verify transactions. Over time, Bitcoin attracted attention from visionaries, tech enthusiasts, and investors. Suddenly, people could imagine a world with truly borderless money. However, this new technology also captured the attention of regulators, skeptics, and established financial institutions. Today, that tension has evolved into a full-fledged global conversation about how and whether cryptocurrencies should fit into existing legal and financial structures. As more people learned about Bitcoin's advantages, its decentralization, its ability to bypass certain banking fees, and its potential as a hedge against inflation, its price climbed. Large-scale investors, including hedge funds and even some tech-savvy institutional players, jumped in. This surge in interest laid the groundwork for an entire crypto ecosystem, which soon expanded to include thousands of alternative coins or altcoins. Each new coin attempted to tackle perceived weaknesses in Bitcoin or introduced unique features to stand out in an increasingly crowded field. Before long, the question was no longer, is cryptocurrency here to stay? But rather, which cryptocurrency will dominate in the long run? This is where our battle truly begins. Right now, many big coins are jockeying for position, especially as new technologies evolve. Ethereum, for example, introduced smart contracts, which allow developers to create decentralized applications, or dApps, on its blockchain. This groundbreaking feature set the stage for decentralized finance, commonly referred to as DeFi, and spurred a wave of innovation that's still rolling forward today. However, Ethereum is not without its issues, such as high transaction fees and congestion during peak use. This opened the door for projects like Solana, Polkadot, and Cardano, each boasting faster transaction times, improved scalability, and potentially lower fees. All these players are now locked in a race to prove that they can solve the biggest technical hurdles more effectively than their competitors. One significant aspect of this battle involves regulatory challenges. Lawmakers and government agencies across the globe are trying to figure out how to oversee this rapidly evolving space, which doesn't neatly fit into traditional financial frameworks. Some countries like China have enacted strict bans on certain crypto-related activities, such as mining or trading, in an effort to maintain control over their monetary systems. Other nations, such as El Salvador, have chosen a drastically different path, going so far as to adopt Bitcoin as legal tender, in hopes of stimulating economic growth and attracting global attention. The United States and the European Union also continue to refine their approaches, debating how best to balance consumer protections with the desire to foster innovation. Where regulation goes, market sentiment follows. Many large companies are waiting on the sidelines, prepared to invest large sums of money into crypto projects once they know for certain that they aren't stepping into a legal minefield. Meanwhile, some companies have already invested in Bitcoin or experimented with Ethereum-based systems, betting that the upside potential outweighs the risks. The outcome of ongoing regulatory negotiations, especially in the United States, could significantly impact which cryptocurrencies gain mainstream adoption. If a coin or platform garners a reputation for compliance and safety in the eyes of regulators, it may enjoy a major leg up on its rivals. This, of course, makes the entire situation even more thrilling and unpredictable. Beyond regulation, there's the factor of technological advancement. In the beginning, Bitcoin's main technology was a revelation. However, over time, experts noticed limitations, including relatively slow transaction speeds and high energy consumption. This sparked an entire generation of alternative approaches to consensus mechanisms, ways for blockchains to validate transactions. Ethereum's shift from proof of work to proof of stake is a prime example of how the technology continues to evolve. The central idea of proof of stake is to reduce the enormous energy consumption that results from proof of work mining, speeding up transaction times, and making the network more efficient overall. On the other hand, some people argue that proof of work is more secure and decentralized. Either way, the continuous race to create better, faster, and more secure blockchain technology has turned the crypto world into a laboratory of innovation. Another major trend influencing the crypto battle is market volatility. The crypto market is notoriously volatile, with prices sometimes experiencing double-digit percentage swings in a single day. This volatility can deter more traditional investors who favor predictable returns, but it also draws in high-risk, high-reward traders looking to leverage wild price movements. Volatility can be both a blessing and a curse. For instance, if a coin surges in value, early investors can see astronomical returns. Conversely, dramatic price drops can wipe out portfolios overnight. As more and more institutional and retail investors enter the space, the question becomes, will increased liquidity and regulatory clarity help stabilize prices? Or will crypto remain an inherently volatile asset class? It's not just about prices and speculation, though. The crypto community is also grappling with scalability and security concerns. With millions of people making transactions daily, blockchains need to handle enormous loads without slowing down or driving fees through the roof. Projects like Cardano boast a research-first approach, while Solana claims some of the fastest transaction speeds in the market. Each chain tries to prove it can handle global-scale usage. Yet, as we've seen, with high-profile hacks and security breaches on some exchanges and DeFi platforms, building a bulletproof system remains a monumental challenge. Many believe that a multi-chain world might be the best solution, where different blockchains can specialize and then communicate via bridges, though we've also witnessed cross-chain bridges suffer hacking attempts. Clearly, security remains a top priority. Another angle shaking up the crypto scene is the rise of decentralized finance, or DeFi. DeFi aims to replicate traditional financial services, like lending, borrowing, and trading, without centralized intermediaries, using decentralized applications built mostly on Ethereum and other smart contract platforms. DeFi has introduced new ways for users to earn interest on their crypto, provide liquidity to trading pools, and even insure their assets through decentralized systems. This innovation threatens to disrupt traditional banks and credit systems as it offers people around the globe the possibility of financial services without requiring a physical bank branch or a credit check. The popularity of DeFi means that whichever chain can run these services efficiently, securely, and cheaply stands a strong chance of climbing to the top. Ethereum is the current market leader in DeFi, but newer platforms like Binance Smart Chain, Avalanche, and Polygon are also making waves, each with unique advantages. On top of that, we have non-fungible tokens, or NFTs, taking center stage. NFTs represent unique digital assets that can range from pieces of digital art to in-game items, music, and even real estate in virtual worlds. These tokens exploded in popularity when high-profile sales grabbed media attention, turning some NFT creators and early investors into millionaires. NFTs rely on blockchain technology to prove the authenticity and ownership of digital items, which was previously difficult or impossible to do. While Ethereum remains the main hub for NFTs, high transaction fees and network congestion have fueled the rise of alternatives like Tezos, Polygon, and Solana. The question now is whether NFTs are a passing fad or a sign that digital ownership will remain a key component of our future. Regardless of your personal opinion, NFTs have introduced mainstream audiences to the possibilities of blockchain technology, adding yet another layer of complexity to the crypto battle for dominance. Meanwhile, more established institutions have begun to see crypto as a legitimate asset class. Not too long ago, many banks and financial giants scoffed at the idea of holding digital currencies on their balance sheets. Now, we see major names like JP Morgan and Goldman Sachs exploring crypto trading desks and offering Bitcoin funds to wealthy clients. Other large companies, including MicroStrategy, have invested billions of dollars in Bitcoin, believing it to be a hedge against inflation, or a potential store of value, similar to gold. Companies like PayPal and Robinhood have introduced mainstream crypto services, enabling everyday users to buy and sell digital coins directly on their platforms. This wave of institutional interest signals a shift that many argue will bring greater acceptance and stability to crypto. However, it also raises concerns about whether crypto might lose some of its decentralized spirit as it becomes woven into the fabric of traditional finance. One highly anticipated development that could tip the balance is the upcoming regulatory crackdown in the United States. Congress and regulatory bodies like the Securities and Exchange Commission, or SEC, are expected to set clearer rules for how cryptocurrencies should be classified and supervised. Issues like whether certain coins count as securities, how to tax cryptocurrency transactions, and how to enforce anti-money laundering laws are all on the table. Some argue that too much regulation could stifle innovation and push crypto businesses offshore, where oversight is looser. Others see clear guidelines as a positive development, believing that once regulations are set, large investors who have been sitting on the sidelines will finally jump in, driving up adoption and possibly boosting coin prices across the board. The clarity in the US regulatory landscape will likely have ripple effects in other countries. For example, if the US decides that stablecoins, cryptocurrencies pegged to the value of a traditional asset like the US dollar, are subject to strict oversight, it could slow down the growth of those particular tokens worldwide. On the other hand, it might also bring a sense of security to everyday users. Knowing that your stablecoin is backed by real assets and regulated by financial authorities might encourage greater participation in DeFi and other crypto ventures. Essentially, the resolution of these regulatory questions could either act as a big boost or a major brake on the crypto market's growth trajectory. We can't ignore the potential for industry consolidation. If regulatory pressure intensifies, smaller or less compliant exchanges and platforms may have to shut their doors or merge with bigger players. This consolidation could drive the crypto community toward more robust and well-regulated platforms, possibly creating a more transparent and stable environment. In theory, that kind of stability could draw even more users who were previously hesitant about diving into a realm known for wild speculation and the occasional major hack. The battle for crypto supremacy isn't just about price pumps or which chain can process the most transactions per second. It's about shaping the future of finance on a global scale. Will we see a world in which people can transact seamlessly across borders using decentralized systems free from the control of traditional banking authorities? Or will central bank digital currencies, government-issued digital tokens, ultimately overshadow private cryptocurrencies by providing many of the same benefits with official backing and legal tender status? Governments like those in China are already testing digital versions of their currency, and others around the world are following suit. If official digital currencies gain traction, it might draw attention away from decentralized cryptocurrencies, altering the entire financial landscape in ways we can't fully predict. Nevertheless, the crypto community's hallmark is resilience. Over the years, Bitcoin has been declared dead by mainstream media countless times, yet it still stands. New challengers keep emerging, each with their own vision of how to improve upon earlier technologies. Some will inevitably fade away, while others will spark revolutions of their own. With so much activity, speculation, and fundamental development happening all at once, it's an incredibly exciting space to watch, or be a part of, if you're willing to accept the risks that come with it. If you're new to the crypto world, it can feel overwhelming. You might be wondering what all these different coins do, or why people are so obsessed with decentralized finance. The deeper you look, the more you'll realize that each project attempts to address a specific set of problems. Maybe it's transaction speed, maybe it's environmental impact, maybe it's bridging different blockchains together for easier data sharing. Each time someone discovers a new problem and tries to solve it, the crypto space branches out again, creating further battles for dominance in smaller niches. So, which coin will come out on top in this massive battle? Bitcoin has the first mover advantage, the strongest brand recognition, and the largest institutional backing. Ethereum has a vibrant developer community and the largest ecosystem of decentralized apps, plus a long-term plan to make the network more scalable and energy efficient. Solana boasts lightning-fast transaction speeds. Polkadot aims to connect multiple blockchains, and Cardano focuses on research-driven upgrades. There are also countless other chains trying to carve out specialized roles in the market. It's entirely possible that no single coin will dominate everything, and that the future will involve a multi-chain environment catering to different needs. Still, the stakes remain incredibly high. The outcome of this battle has the potential to reshape financial markets on a global scale. That's why so many eyes are glued to every new development in the crypto space, from major upgrades to regulatory pronouncements. People are fascinated by the idea that we might be on the verge of a dramatic shift in how money works, how finance is structured, and how economic power is distributed around the world. Remember, though, with great opportunity comes great responsibility. The crypto space isn't immune to scams, hacks, and other challenges. Investors should be cautious, do their own research, and manage risk appropriately. At the same time, the technology itself continues to show promise from decentralized finance that can reach the unbanked to secure and transparent supply chain tracking. The vision is big, truly global, uncensored, trustless transactions that can empower individuals. It's a vision that captivates many people, driving them to spend hours learning about blockchains, coding smart contracts, and shaping the next wave of crypto innovation. As we move forward, the key points to keep in mind are regulatory challenges, technological advancements, and market volatility all play critical roles in determining which cryptocurrency might lead the pack. The entire crypto community is working to overcome issues of scalability and security. Competition is fierce, with each platform racing to distinguish itself through innovative technology partnerships and real-world use cases. DeFi is challenging traditional finance. NFTs are redefining digital ownership, and institutional investors are increasingly comfortable treating crypto as a legitimate asset class. So, who do you think will eventually wear the crown? Will Bitcoin's brand recognition keep it on top forever? Will Ethereum's smart contract functionality and DeFi dominance push it to new heights? Or is the door still open for a dark horse, like Solana or Polkadot, to seize the throne by solving scalability in a way that's faster, cheaper, and more energy efficient? Could there even be a brand new project on the horizon that will rewrite all the rules? These are the questions that keep crypto enthusiasts up at night and keep the markets roaring with energy. Your guess is as good as anyone's. That's part of what makes the crypto landscape so captivating. It's still unfolding before our eyes, full of possibility, and also fraught with risk. If the upcoming regulatory environment in the United States or elsewhere becomes clearer and more supportive, we may see an unprecedented wave of mainstream adoption. If regulations become too restrictive, innovation might be stifled or moved to friendlier jurisdictions. The tension between these outcomes fuels the drama, inspiring debate among investors, developers, and policymakers alike. One thing is certain: the battle for crypto supremacy will continue to heat up. The outcome, whatever it is, will reshape the future of finance in ways we're only beginning to understand. Just think, in a matter of years, we've gone from niche forums discussing Bitcoin as a fringe idea to major corporations and even some governments treating digital currencies like a core strategic asset. That trajectory suggests we're only in the early chapters of a much longer story. And that means opportunities for those who can anticipate and adapt to the shifting winds of crypto innovation and regulation. So, let me know what you think. Which coin, if any, will come out on top? And what changes do you see looming on the horizon? Do you think regulation will help push crypto into the mainstream? Or will it water down the spirit of decentralization that started this movement in the first place? I'd love to hear your perspectives, because the beauty of a decentralized future is that all of us have a voice in shaping it. If you're eager to dive deeper, check out my previous video for valuable insights on emerging trends. We covered everything from stablecoins to cross-chain interoperability, topics that are sure to come up again and again in the conversations shaping crypto's direction. It's a fast-moving world, and staying informed is half the battle. Thank you for taking the time to explore this fascinating arena with me. Keep learning, keep questioning, and never stop wondering about what could be next. Because in crypto, the next big thing is always just around the corner. Remember, the future of finance is being written in real time, and crypto is at the heart of it all. The outcome could shape our financial world in ways we've never imagined. Leave a comment so we can keep the conversation